What's up, guys, and welcome to my first cryptocurrency trade explanation video. In these videos, we will be breaking down the trades step by step from the point where we're analyzing why it might be a good entry to the point where we're entering, how we're calculating our position size, and then ultimately, how are we taking profits on the way up. So let's look at this trade right here that has since went up over 9% since entry over the course of about a day. So a very nice trade here on Bitcoin, and let's look at why this was the case. So if we start off on the daily time frame, we knew that we were in, before we pushed above this gray zone, we knew this was our resistance zone that we were looking at. If we went down to the 4-hour time frame, we had down here changed the 4-hour trend back to bullish. But before we did that, we had our trend over here that was very important to watch. And so whenever we're looking for a trend change, we're looking for a pattern of 4 things on the bear side. And that is a high, which is what we have right here, a low, which is the bottom of this candle right here. I'll just zoom in on this so we can see it a little bit better. Then we have a lower high right here in comparison to this one. And then we have a lower low right here with this white candle. So we pushed, let me grab my brush here. So we had our high, low, lower high, signifying that the bullish momentum that we had right here is waning. And then we had our lower low right here. And once we had that lower low, that establishes this white candle, which is our previous support zone because we pushed into it and then pushed above. So it supported the price and pushed it up. And then we rejected off of it and pushed down and closed 2 candles below the previous low, signifying that there was a strong push down and there's strong bearish momentum, meaning there's a lot of sellers right now. So what that tells us then is now we're looking for a short entry, because now that we have a valid bear trend, we're looking for a re-entry on a push higher, which is what we get right here, for a push down lower. And so that short entry on this white candle got you a nice trade as well. If you were to enter even just on the wick of the bottom of that candle, that would have led down to about a 7% trade. But we had another level to watch right here with the same exact pattern playing out once again. And that was, we had our low right here. We had our high, low, which is this white candle. Whoops. Just give me 1 second. I always get messed up with the brush here. We had our low, then we had another lower high in comparison to this one. So people are still selling off every time we rise in price. We rise in price, we sell. We rise in price, we push down and we sell. We rise in price, we push down and we sell. And so that's a bearish trend with a continuation of lower highs and lower lows. And so when we get this low right here, the lower high and then the lower low, with both of these candles closing below this white candle's low right here, that makes this white candle right here a resistance zone on a retest. And the reason for that is because we had the price push off of this zone and support this zone. It was, people were buying right here. And but then we pushed down below it and closed 2 candles below the low of it. So that means because people were buying here, now when we come back into this level, it should act as resistance. And indeed, it acted as resistance perfectly right here. We had our rejection off of this level. You could have shorted this as well. That gave you another almost 4% trade. And then once we rejected off of that level, we pushed through it and had a clean push through it right here with candle closes above it. When we retested that zone initially, we pushed up to here, we came down, we pushed off of it, But then we came down and tested it again and grabbed some liquidity below this low. So let's talk about this progression here. So right here we had a change of momentum. So the bulls were getting lower high, or the bears were getting lower highs and lower lows here on the 4-hour time frame. But then the bulls had a low, a high, and then a higher low. And once they got that, they then got a higher high right here. And when that happened, when we pushed, we had our low, high, higher low, higher high. What that's telling us as a trader is we have people buying the dip down here. You can see that with the long lower wicks of these candles. Then we have a push above, meaning people are buying. We had a push down again, but we set a higher low in comparison to this one, which means the bearish momentum is waning. So now the bears are getting weaker. You can tell because when we pushed down this time in price, we didn't get as low in price as we did when we first pushed down. So that's meaning that the bulls are now gaining momentum. But the confirmation is when we get the higher highs above this high right here. And we get that right here, which now turns this gray zone, which was previously a resistance zone, into a support resistance flip zone. And so when we get a push back into that zone, we can long a retest of that zone with our stop loss below that zone, because we know if the price goes right through this zone, it's not a valid support level. And so we want to be out of the trade so we can cut our losses and minimize our downside risk. And then we will be targeting a push above this high right here, because we had already tested this gray zone several times. So we knew, every time we test a resistance zone, it gets weaker. And so that's what we were getting here with, multiple tests into this gray zone before eventually we were bound to push through it. So even if we just pushed up to that top of that gray candle and we had our stop loss below, that was still about a 3.91 risk to reward ratio, meaning we would make 3.91 times as much money if the price moved in the direction that we wanted it to than if it moved against us and we got stopped out of the trade. So this is a really good long entry, and where I like to enter on these support zones or resistance zones for that matter is on one entry, which is 50% of my position, on the wick of the candle, which is right there, and then one other entry on the body of the candle. And that's what we had right here. So if we're on the long side, we're going to be doing the top of the body of the candle. If we're on the bear side, we would enter on the bottom side of the body of the candle. So you can see the body of this candle, this white candle, and I'm going to get rid of these marks here real quick so we can see it a little bit easier. So when we're looking at this candle, you can see that the pink lines are taken from the wick of the candle, which is our ultimate top of the support zone, and then the top of the body of the candle, which is the other stronger support zone in this case, because the body of the candle, either the low or the high of the body of the candle, is the strongest part of the support or resistance zone. It's much stronger than the wick because there was more volume in that zone, and the close or the open, which is what constitutes where the body of the candle is, are the most significant values for that level. So this gray zone with these two pink lines was our entry, and we had our entry get triggered here. We had an initial entry right here that got triggered. We pushed up from there. If you were just to take that initial trade, you could have made approximately 4% or a little bit more than 4% in the subsequent 8 hours that happened there. Otherwise, you could have waited for another push down lower in the subsequent 8 hours that followed, where we got the rest of our bids filled right here on a retest. Now, I personally did not get filled on the second test, and the reason for that is because I personally, when I like to play these support zones, I like to play the first retest of those zones, because that is the strongest test of it. After it gets tested, every time that a support or resistance zone gets tested, it gets weaker. So every time that we were testing this gray zone, for instance, it was weakening that support zone. So every time we pushed into it, there was less and less people willing to sell at that zone because we kept pushing into it. And so eventually, that's why this trade was a good setup, because we were bound to eventually push above it. Now, I only made the 4% trade that was right here, which was still a good trade for a 4-hour time frame. And I was still happy with it, but then this was the ultimate trade right here. And if your stop loss was below and you just kept your bids in, you were still getting filled right here. And you subsequently, if you were to enter down at the body of that candle, you would have made, you know, over 9% by now, which was a really nice trade. And we might even continue to go higher from there. I imagine that we probably will, now that we've broken above this gray zone. This is actually probably going to act as support if we get a retest of that zone. But this is the overall trade setup here. It's a very simple trade. We had a resistance zone right here that got validated right here with a push down. When we pushed through that zone and confirmed our bullish trend with a low, high, higher low, and then higher high pattern, we knew that this zone should now act as support. We could use our long position tool on TradingView here that you can find right here on the toolbar. You can click on long position. You can star it if you want it in your favorites. So when you click your favorites right here, it'll pull up all of your tools that you like to use regularly, and you can keep that right on the chart. Otherwise, you can select it right from here, click it, add it in, and then what I like to do is for this trade, what I like to do when I have 50% of my position at one spot and 50% of my position at another spot, which in this case was at these two spots on this candle, what I do then is I then take those two numbers, I add them together. So I pull out my phone, the calculator on my phone. It's very simple. What I do is I take those two numbers, I add them together, and then I divide them by 2, which gives me my average. And then what I do is I click on this long position tool. It pulls up this little box right here that gives us our inputs, our style, and our visibility. If we go to the inputs, this is telling us the values for our entry price, so where are we entering the trade, our profit level price, which is this top level right here, and if you pull this, it changes that price, and then our stop loss level right down here. So you can either manually pull these to where you want them, or for more accuracy, what I suggest is clicking on this, double clicking on this, and then averaging the two numbers together if you're going to layer in your entries, and then typing that number in right here. So that, and then click enter on your keyboard. That will then shift the entry to, in this case, 49,783, and then our stop loss level, which we know right here. If we put our cursor over that candle, we can see the low is $49,010.10. So we will put that right here, $49,010.10. Click enter. So now we have our exact percentages that we want. And so that tells us our stop loss, how far our stop loss is away from entry. And then ultimately, if we wanted to even do that for our profit, we could just take this, which is 52,640, and we could do 52,640, click enter. That now moves our entry up. So now we have our exact coordinates for this trade. So this tells us, and the reason why you do this is because you want to know exactly how much you're going to be entering the trade with. So now that we know exactly how much we're entering the trade, or we know exactly where we're entering the trade, and we know that our risk to reward ratio is 3.7, which is high enough for us to take the trade, then we have to actually enter the trade. We have to actually put our bids in. So we put the pink lines in there first. We scout our support zone, we put our pink lines in, we average those prices together to give us our entry price, which is an average of 49,783. Then we need to calculate our position size. And our position size calculation is going to be our total portfolio value times the amount of our portfolio we want to risk on the trade divided by the percentage away from our stop loss. Percentage away our entry. Oop. And we already, if you've done the work up to this point, you already know what these numbers are basically. And so in this case, what we have is, if we knew that our portfolio value was, let's say we had a total portfolio, which is all of your investments, the amount of money that your investments are worth, all of them combined. Let's say that was $15,000. What we could do is we could, take $15,000, we multiply that by the amount of our portfolio we want to risk. So you never really want to risk, in my mind, more than about 3% of your portfolio on any given trade. And the reason for that is because then every time that you take a trade, if you lose the trade, you only lose 3% or less of your overall portfolio value on that trade. So it's pretty insignificant. And so with that, you can stay in the game, the trading game, much longer. So in this case, we'll take our 15,000, we'll multiply that by, for 4-hour trades, I personally like to only risk 1% of my portfolio, up to about 1.5%. Because it's a lower term time frame, there's not as much volume, so it doesn't always work out as well as a higher time frame trade. So I like to risk a little bit less. So let's do 15,000 times 0.01, which is 1% of our portfolio, and that gives us $150. So $150 is going to be our max loss. And that means that if the trade goes against us, that is the max amount of money that we will lose. So if we get stopped out at exactly $49,010.10, this is the max amount of money that we can lose on the trade. And then what we do is we take the $150 and we divide it simply by the percentage away our entry is away from our stop loss. So assuming that we get both of these bids filled, our average entry price is going to be $49,783, and our stop loss is going to be at $49,010.10, meaning that our stop loss in the long tool, if you've entered the coordinates in exactly as we just did, our stop loss is 1.55% away from entry price. So what we do is we take our $150, we divide that by 0.0155, which is our 1.55% expressed as a decimal, and then that gives us our position size for the trade. So if we take 150, we divide that by 0.0155, that gives us $9,677 and some change, but I usually just round it up to the whole number, which would be 96.78. So let's type that in here. And then what we have is our position size. So our position size, if we know it's 9,678, we can divide that by 2. That'll give us 48.38. And we can then take 4,838 of our dollars, put a bid in for that amount at 49,870, and then take the same amount, because we're doing 50-50, remember, at both of these levels, and put that at 49,696.49. And so the nice thing about this is you're only risking 1% of your portfolio, but you get to enter with, a significant amount of your portfolio. Over 50% of your portfolio is going into this trade. If your portfolio is $15,000, but you're only risking 1%. So if you were to take this trade with $9,678 and make only 5.74%, which is up to this high right here, you can take that number, 9,678, if you want to calculate your profit potential, and you can multiply that by the percentage right here, which is 5.74, so we'll do 0.0574, and we would have made $555 on this trade. So that is a very nice trade with minimal risk, a good established support level, with a tight stop loss here of 1.55%, a good strong risk reward ratio of 3.7, which means that if the trade goes our way, we'll make 3.7 times as much money than if the trade were to go against us and we got stopped out. The max amount we would lose is $150, and that's if we get stopped out at this price right here. And overall, this is a really good trade setup that I liked and I took. And I hope this was helpful for you guys to kind of analyze these support zones and how you might play one of these trades for a long entry in the future. You really just have to look for a nice solid support zone that you trust. Use the long position tool to calculate out your entries. Use some of the, what I like to use is the horizontal ray tool right here. And that gives you exactly where you can, and you can use the magnet tool then to pull those lines. The pink line will snap. You can see it's snapping around. It'll snap right to where you want it. So you can pull it right to the wick for one of them, and then you can pull the other one right to the top of the body of the candle for the support level. Average those two prices together to give you your average entry. Put that into your long position tool here as well as your exact stop loss, so you have this percentage. So when you run your position size calculation right here, which is your total portfolio value times your amount of your portfolio you want to risk, divided by the percent away your entry is from your stop loss, that equals your position size, which in our case is $9,678. In this case, we made about 5.74%. We actually made more than that, so if you even push it up higher, we would have made probably over $700 on this trade. And so that is how you risk a very small amount of your portfolio and make an outsized return while risking a very small amount, like I said, of your portfolio. So these are the types of trades that I like to take. I hope that this trade explanation video was helpful for you. If you like this video and you want to see more videos like it, give us a like down below so we know that this is the type of content that you guys would like to see. And we will create future videos like this for short entries as well as some future long entries. And we will also create additional content as well for you guys, like Bitcoin daily updates as well as cryptocurrency market updates on altcoins and Ethereum. And you guys can subscribe to get updates for when we release those videos. So give us a subscribe and leave a comment down below if you have any questions about this video. And until next time, onward and upward.